Hello everyone, this is Andrew McNair from SWAN Capital with our June 2013 monthly market recap. So for the next few minutes, we're going to discuss some of the factors that drove markets in June, as well as the second quarter at large. And we're also going to talk about a few things that you might can look forward to in the weeks and months ahead. And as always, please be sure to review the following disclosure statements following this video. Now, stocks closed the month of June in the red, unfortunately, but still managed to carve out significant gains for the quarter. In fact, 3 out of the 4 quarters have ended in positive territory. Now, for the second quarter, the Dow gained 2.27%, the S&P 2.36%, and the NASDAQ beat them both at 4.15%. Now, year to date, the Dow has surged a huge amount at 14%, while the S&P 500 and the NASDAQ have increased nearly 13% each. So all things considered, we're pretty pleased with the market's performance so far in 2013. Now, we have seen a considerable amount of bumps in the road and some volatility in June as investors try to make sense of the Fed chairman's statements about monetary policy. And there hasn't really been an official announcement about the end of bond purchases, but one federal governor, suggested that the September policy meeting might be when central bankers make a decision to start tapering these bond purchases, assuming the economy keeps up gaining strength and doesn't have any hiccups. Now, markets have been nervous about this news because many analysts believe that the Fed's bond buying program could be the reason for these great market gains in the first and second quarter. But in our opinion, however, the economy can withstand a gradual and well-publicized reduction in bond purchases. And we believe that the Fed will carefully monitor all these economic trends before making any rash decisions or moves. And while despite all these jitters that we're seeing in June, there are many positive factors at work and that deserve note. Consumer confidence climbed in June to the highest level in January 2008, which is a good indication that consumer spending will probably continue accelerating next quarter. Now, Americans have a benefit from the rising property values of late and high stock prices. And the job market appears to be steadily improving. So there's a lot of good signs out there. And while we don't have data for the full month in June, weekly jobless claims show that slow improvement is happening, leading us to hope for a positive overall June result. Now, looking ahead, we don't want you to be surprised if we experience some more volatility surrounding the policy announcement or economic report releases that may come forward in the next few weeks. And we understand that it's challenging to maintain a focus on a long-term financial strategy when markets decline or as volatile as they are of late. But the underlying economic fundamentals that are at play show us that the basic ingredients exist for markets to keep advancing. And stocks are reasonably priced, inflation is low, and interest rates are still low as well. And corporate balance sheets haven't been healthy like this in a long, long time. So while we can't predict the future, all of these factors point to a positive outlook for stocks in the medium term at least. As always, we'll be looking for opportunities to build strong positions for our clients amid all this volatility. Now, I want to update you about SWAN Capital's upcoming events. We have the radio show. We're going to have a July 4th celebration this Saturday. And as always, you can tune in at WCOA 1370 from 12:30 to 1 o'clock. I hope you found this commentary beneficial. And as always, if you have any questions about what you heard in this update, or would just like to discuss your personal financial situation, please give us a call at 850-380-9558. That's 850-380-9558. And we'd be happy to talk with you.